Turning our attention now to a challenge every entrepreneur faces. How do you decide the best way to fund your growth? Is it more strategic to bootstrap your startup and maintain control, or raise funds to accelerate expansion and scale faster? So, in our next session, Bootstrapping versus Raising Funds, Finding the Right Path for You, we will dive into these questions. So, get ready to learn from our founders who have navigated both paths as they share experiences, lessons learned, and the financial and strategic considerations shaped their decisions. So, let's give our warm welcome to our panelists as they take the stage. Please give a huge round of applause for our mediator, Ifeanyi Obinali, the CEO and founder of Lead Security Group, Inc. And we have our panelist, Derek Bowles, the VIP Public Relations at Nikole Vaughn, the CEO and founder of AccessAI, and Victor Penev, the CEO, Edamam, and Ifeanyi Obinali, CEO and founder of Lead Security Group, Inc. Thank you, folks.
Good morning, everybody. So we'll be talking about a very important topic. And as founders, this topic, we must have dealt with it all the time, right? Right from the start of our business, trying to understand if we're going to bootstrap or raise funds for our business. And this is a very important issue because we have to make payroll, we have to think about scaling the business, we have to think about hiring quality talents to help the business grow. And doing all of this means we have to think, is it sweat equity, continuous bootstrapping, reinvesting our profits into our business, or do we want to raise funds to scale the business as fast as possible? That's why our two panelists here today, Victor Penev, a serial entrepreneur and founder and CEO of Edamam, a data company focused on food and nutrition. Victor is also a mentor and investor in food technology startups and advises early-stage entrepreneurs. Before starting Edamam, Victor co-founded and sold Bulgaria's largest internet company, NetInfoBG. Victor also ran the international digital business of Playboy Enterprises and was instrumental in starting the digital marketing efforts of BMG. Victor holds an MBA from Stanford. Welcome, Victor.
Thank you.
Nikole Vaughn is founder and chief executive officer of AccessAI, AccessIT, focused on amplifying human potential through AI technology and accessibility. Nikole is a strategic executive who scaled a family-owned Commonwealth computer company from $5 million to $14 million in revenue and secured a $66 million contract during her tenure at Accenture. Welcome, Nikole.
Thank you.
All right, so let's dive into it. So tell me, I know you've raised a lot of money, but did you bootstrap at one point? What's your founder journey?
So I did bootstrap, but before I answer that question, I'd love for you to introduce yourself and tell all of your accolades. So you've done a wonderful job introducing me, of course, Nikole and Victor, but please share a little bit about who you are and all the accolades that you bring with you to the stage today.
Well, thank you very much. Appreciate that. So Ifeanyi Obinali is my name, born and raised in Nigeria, moved to New York City in 2008. And I got into the security industry right off of getting into New York. And even though I hated it at the time, I figured at some point I could grow in the industry. And, 10 years later, I decided I was going to start up my own company, Lead Security Group, security company, a physical security company based in New York and provide services also in New Jersey. And from 0 employees or 1 employee myself to well over 300 today. So I personally bootstrapped my business and we're still bootstrapping. But I think we've passed the stage of bootstrapping. We've grown now. Our business is actually a successful story. So I think that this panel is very important because growing my business, there were a lot of challenges I had to go through and a lot of things I had to do. And so when I knew about this panel, I felt it was going to be a very good panel to share my thoughts and ideas on. And what a better way to do that with these two wonderful people on stage.
Perfect. Thank you. So now I'll answer your question. So my family and I have opened we're serial entrepreneurs as well, both for-profit and nonprofit. So with AccessAI, I chose to bootstrap. One part of me that we've always chosen to do once I finished undergraduate school in the U.S. And started working, I made a point to save up a year's worth of my salary in an accessible account at all times. So I always have cash. So with AccessAI, I've persisted this for over 20 years. So with AccessAI, I chose to bootstrap so that I would be able to focus on the mission and implementation in our industry versus managing the board needs and needs of investors. So I bootstrapped AccessAI with that's our for-profit. Nonprofit is the Coding Collaborative, where we again bootstrapped. And although we have a board, I chose to bootstrap again because in that way we could again focus on the mission and not have to answer to funders. As you know, funders have requirements, and when we are in complete control of our funds, we make decisions. We ask the board for their thoughts, but at the end of the day, we can execute without any requirements from anyone else. And then finally, my family ran Commonwealth Computer Company for 30 years. And with that, it was also bootstrapped in a different way versus direct cash. We used credit lines. We used bank credit lines and investments. So we would use our investments and access the funds through that or through credit lines, and then we would just reinvest. So every time a purchase order was executed upon and we were paid back, we would use those funds to reinvest into the business. So we've only bootstrapped for the last 30 years.
Very good. So bootstrapping is all about control.
Control.
Yeah, you want to make sure everything is in control. You're making decisions yourself. You can report to people, but at least you're taking all the decisions. Now, Victor, share with us. Did you bootstrap, or I know you sold your company at some point, but how was the story? How did you start?
Sure. So just a little bit of story. I've been an entrepreneur for 35 years. I've built 4 companies, and they were all bootstrapped. Now, a little bit of a definition of bootstrapping, because there is different things that people think about it. It doesn't mean don't raise capital from the outside to me. It means raise capital that doesn't give away control, and to some extent, always operating with little less than you need. So you have the discipline to find creative solutions. I think this is one of the most important things about bootstrapping, because when you have too much capital, you become profligate. You start spending money, you hire too many people, and nothing fails like success. You raise a lot of money, you grow, and then you fail. And I've seen it many, many times because of, being a mentor to over 200 startups. And the ones that fail are the ones that get a lot of money. The ones that operate with real creativity because they don't have enough funds are the ones that really succeed. So I've bootstrapped all my companies. The first ones I just didn't have an access to capital, so there was no option. Then the largest company in Bulgaria, which I sold, I bootstrapped through friends. Everybody gave me $5,000. All in all, we raised $140,000, plus a little bit of money I've saved right after college, and that we sold this business for over 50 million. But that was purely going day by day, figuring out how to do it. We actually went through the dot-com bust in 2001 and had a period of 6 months when we didn't pay anyone because we didn't have the cash. Luckily, we gave a lot of equity. People stuck with us. Eventually, when we sold the company, they were very grateful, but it was a tough moment. So this is an example of what bootstrapping means. And so I've always thought that bootstrapping is the best way to run a company. I've very much refused venture capital. And I've had a lot of venture capital actually come to me and say, oh, you built this business, it's profitable, let's put some money in it. Generally, I said, sure, I'll take your money if you agree to my terms, which means no preferences, no nothing. You invest like anybody else. There is a fairness question there as well, whether you treat everybody on your cap table the same way. And I do have a couple of VCs that have agreed to that, but it is not about taking money from outside. It's about taking money in a smart way and always on your terms.
Very good. So that's one very key important thing we have to take away, right? You can raise funds, but just ensure that you still have control of your business, right? It's very important. All right, that's great. So now talk to me about some of the challenges you had to overcome just bootstrapping your business and then just thinking about scaling, how all of that plays into it.
Yes, so it was touched on just now. With bootstrapping, you have to be very diligent and focused and organized and responsible. So you cannot exceed what you have. We've always made payroll, but we've made payroll at the expense of the founder not necessarily taking salary. So with Bootstrap, but there are options beyond that. You can take there. There are other ways for the founder to sustain life. We've never been without. We don't have a down and out story by any means, but we've always made sure that we've made payroll first, and then the founder has sustained life through other ways, very creative ways that are legal. But that's been our challenge, is just making sure that we stay focused, organized, responsible, because you can't exceed what you have. I mean, we look at with our business, we look at cash, and we use the cash that we have to fund what we're doing.
Thank you. Great answer.
Yeah, I'll ask you the same question so that you can, at least share a little bit of your story. I think it's very, very inspiring. And also, I know you started a new business in Nigeria, so it's all interesting. And then I'll answer the question as well.
So yeah, I mean, I did bootstrap my business from the start. I think when I first started, I didn't know I was going to have a big business. I initially, and I think it goes back to the point that you just made, talking about not having too much and then having to be creative to try to make something out of it. I started my business thinking it was going to be a part-time business that I would do for myself. I still had my jobs at the time. I was working full-time job for a company, but then I started it because I've been through the entire security process at the time, experience process, I would say, just from starting as a security guard and all the way to security operations manager, account manager, business manager. So I knew the physical security industry. I knew it very well at the time. And that was what inspired me to start my business. And so when I started it, it was just a side gig kind of business for me. But as time went on, I started picking up, and it was just reinvesting every funds. I kept my personal business for as long as possible while, working on growing this business. And that really helped out because a lot of my funds, even at the time when insurance was so expensive, when I wasn't even making the money for it, I was paying for it with my personal funds because I knew when the business starts coming in, these are one of the requirements they will ask from you. And if you don't have insurance, you're really not ready to get that opportunity, right? So I had to bootstrap all that process. And really, it was, I think I would definitely do it again. I haven't raised any funds at all for my business. It was challenge at some point to make payroll, I'll tell you that. But again, it goes back to you as a founder knowing where you have to just sit back and look at stuff and say, okay, this is where we need to head next. So there were many days I didn't take payroll. There were many days I had to borrow from my wife. There were many days I had to borrow from friends just to make payroll while waiting for my clients to make payments. So these are all challenges you face as founders and business owners, but it's up to you to have the right attitude on how to go about it. So that would be my answer.
Yeah, excellent. So just to echo Nikole, on terms of making payroll is always the number one priority. Like I said, we've had a couple of times we couldn't make it. That was the company I started just because it was at the dawn of the internet, and we were an unknown little company in Bulgaria, and everybody was, "What's the internet? And why should we give you money?" But in any case, it did happen. Another time I did have a challenge was during the pandemic. When the pandemic hit, we didn't know how that's going to impact our business. So I went back to every single employee and said, look, would you take voluntary cut? And I'll personally take 100% cut, but, whatever you can afford. I'm proud to say that save but one, other than one person, everybody got between 30 and 50% pay cut voluntarily. We put the money in escrow. And then when things started looking up 6 months down the road and we realized that's not going to be negative impact on the business, we paid back all the money. So I think honesty is a super important tool when you deal with people, when you have tough financial situation. You just have to be upfront about this is the situation of the company, this is what we're doing, and this is how we plan to tackle it, and we have to be everybody on board. I mean, I love the name, the etymology of the word company. It's from Latin compan, means breaking bread together. So it is a group of people that are breaking bread together. And if you treat people that way, you actually succeed. So that is one. And the other is I give every single employee, once they make a year into the company, I give them equity. So everybody is a shareholder and they get all the management reports that everybody investor does. And so that gives them interested in the company, not only from the perspective I'm going to eventually sell and make some money, but also they understand what's going on with the business. They are not treated as just employees. They are owners of the company. And that is also another tool that's been very successful.
Yeah. So what I love about sitting with these guys is that you can hear that the people are first. So the very mission minded and the people are first. And that's what makes a great founder, especially a founder that chooses to bootstrap.
Thank you. Thank you for bringing that in. All right. So beyond bootstrapping and equity rounds, what other alternative financing options should founders be evaluating to raise funds for their business where they're not losing control?
Sure. So you can be quite creative. I mean, I've raised equity from friends and family, and I'm proud to say that everybody that's invested in me in previous company, almost everybody has come back to the next company. You know, when you treat people right, and you're open and honest with them, and you don't give preferences to certain investors, when they sell out, you know, they get some cash back, they eventually invest. So this is one way. It's almost self-sustaining. The second way is, and this is, you have to be cash flow positive, so have some assets. I run businesses that are very asset light, so I have nothing to mortgage against. But once you become cash flow positive and you have to put your personal assets on the line as a guarantee, you can get a credit line. And I've had to do it a couple of times, get a credit line. There's always ups and downs in the cash flow. Our business tends to be seasonal. We get a lot of our cash in December, and then Q1, Q2 especially tends to be low. So it's managing that, and oftentimes, gets a little bit of a credit line to get you through the low times until the cash comes in. And so that's the way. But the best way of financing the business is revenue. So go get your customers, make them pay you, and that's the best way to finance a business.
My answer is the same. Revenue, for sure. And I call that cash. And then credit line, but it's waged against your personal assets and keeping an asset low organization.
Yeah, and I'll say the same thing. Cash is king, right? If you have that in the bank, it helps you decide how you move forward, what decisions you're making. And for me, during my bootstrapping days, I took a lot of MCA loans. These are loans that you have to pay back weekly, monthly, really short loans. So as soon as my funds come in, I pay them out right away. So next month, I'm actually there with them again, taking another couple $1,000, and 2 months later, they all paid out. So again, credit line as well as the business grew. First of all, I have to say this also very importantly, that you have to get a good CPA. You have to get a good business accountant, right? And that was one of the challenges I had in my business, where one year I made about $500,000 and had to pay over $1 million in taxes.
Yes.
Because I had a terrible CPA at the time. And then later, just because of that episode, I went back, found me a good CPA, and within the next year, he worked on getting me over $700,000 back from the IRS. It takes a lot for the IRS to give you that kind of money back. So going back to my point is, as you bootstrap, pay attention to everything. Pay attention to your funding, pay attention to your CPA, pay attention to have a business attorney, right? Somebody that you have to run through very important issues with, talk to them about your business, and let them give you the advice that you need to help keep your business moving, because believe it or not, there's a lot of people, employees too, that are trying to take out of your business. As much as you're doing everything you can, to keep them paid, keep them employed and all of that, they're looking for every loophole to try to come after you. So again, going back to what my fellow panelists have said, you have to ensure that you're building integrity, right? You have to ensure that your creative mind is never slow. You're always thinking about what are we doing next month, not necessarily the next payroll, right?
So you asked about challenge and you brought up CPA. We have CPA and a tax attorney, both. And one challenge we ran into is ignorance. We were so focused on the mission of the company, we weren't thinking about the tax implications. And so we were triple taxed, right? And we didn't realize what triple tax meant, right? And when I said it, people didn't believe me. No, you're not triple taxed. Yes, you are, because you have to pay income tax, yourself income tax, you're paying payroll tax, and then the company is also paying a tax if you don't have a good tax strategy. So that is a challenge that we encounter with bootstrapping, because we have less people monitoring the finances. It becomes the onus becomes on the founder and the workers. So I'm so thankful that you brought up the taxes. So you need a CPA and a tax attorney.
Very important.
Yeah, and just to share a little bit, it's a slightly different story, but yeah, absolutely good accountant, good tax attorney. One thing I do is, because I'm very diligent, I'm actually my own accountant because I have studied accounting, and for me, it's like the best way to stay in touch with the business is close the books every day. You know exactly what's going on. But one thing that I do is, as I see the cash flow for the year, I can manage it so at the end of the year, I know I have expenses that I have to make, but they're discretionary. So I always try to manage the company. If we're going to make, profit, let's spend the money in December, make sure we almost break even, so we pay virtually zero tax. And so that's always been a good strategy, because then you can manage that. And if we are going to lose a little bit of money, okay, we can bootstrap a little bit, tighten up the belts. So that's one thing. The other is, and this is particular to me just because I grew up in Bulgaria, a lot of my team is actually in Bulgaria, completely different tax jurisdiction. I have a very good accountant there, but it has saved me a lot of money just because, there the tax rate is 10%. It makes a lot of difference. So.
Thank you. So yeah, very important. You have to look into everything, right? You can't just be hyper focused on revenue or be hyper focused of trying to bring in a business and not paying attention to what you already have going on. It's very important. All right. So as we try to wrap up, give the audience some time to ask questions. Give us one concrete time-bound action a founder who's undecided here about bootstrapping or fundraising can take this week to actually come to a confident conclusion on what they have to do next.
I have to think that's a really general question, because every company is different. Every organization is different. So I would look at your cash flow. So I would look at what the probability is, or look at the business type and determine how your inflow will occur. What I mean by that is, some organizations are depending on industry also. So some organizations are going to earn funds through what we call SLED. It's state and local government, higher ed, and K through 12 organizations, or federal government. There are certain rules in place to ensure that you're paid within a 30-day period. So in that case, you may choose to bootstrap because you know that you are going to receive money in 30 days. But that is a non-consumer-based model. That is a government-based model that you're in. So to me, we've chosen government-based model. Requests for it's RFQs, contracts through government-based model, because of the need for cash flow. There are rules and laws in place that if you interact with a government entity, when you submit the invoice, they have terms. Yeah, you all probably know this, right? But they have terms that they have to adhere to. If you're in a consumer-based model or a model where you're interacting with private or public companies, there are laws in place, but they are strictly enforced when you're interacting with government. So if they get to day 31 post term, if your terms are net 30 and they get to 31 days, you are allowed to then start to charge interest on those invoices, and you don't have to discern that or determine that. It's a part of the law. So to answer your question, I would look at what my business model is to determine whether or not I'm going to bootstrap. Summary: if you're in an industry and your customer base is bound to pay based on law, like what I described, then I've chosen you bootstrap for the 30 days and you will get paid back. And you just make sure that you have multiple purchase orders coming in and that your margin is high enough such that when they pay, you're now investing back into the organization. Hopefully that answers the question.
Very well. Good answer.
Yeah, I think ultimately whether to bootstrap or not to bootstrap is a personal decision for the founder. So if you're on the fence, I think take the next week to do soul searching. Decide what type of person you are. Are you a person that is willing to take the risk, live, with unknown whether you can pay yourself, how you support your family, et cetera, et cetera, et cetera, because this is all the reality. But if you are that person, definitely go for bootstrap. I think there's a lot of benefits for that. It's a higher risk profile. Now, the other thing is kind of extract yourself from the narrative that's everywhere on social media and VCs that growth is the ultimate metric. Growth can be very cancerous, and there's a reason why cancer is growth. Because if you grow too fast at the beginning because you have a lot of cash, you're most likely to burn your organization to the ground. So slow growth is an important element. And so if you extract yourself from that narrative that growth is everything that matters and focus on customers and providing value, then I think the decision to bootstrap becomes easier because you don't need outside capital necessarily to grow fast. You need to build it person by person, much like Ifeanyi has started his business, with one person, two people, etc. You build it, and then you know the business inside now very well because every single decision you've made, not based on the I have cash I can spend, but based on I don't have cash, let me figure out how to do that. So that'd be my do soul searching.
Thank you very much. And also I will add to, you have to understand where your business is at every given point in time. Awareness, know where your business is, what you're doing. You're looking at the numbers, what's coming in, your expenses, what are you keeping, and all of that. And then finally, I would say that if you're looking to scale as fast as possible, it also depends on the industry you are, right? The industry and the product you have. There's some industries, slow growth, very important. Take it easy, keep your business growing slowly. And then there's some product or services that might just need to scale, and you would need to raise fund for that, right? So understanding where your business is at and what you have to do next, like Victor also said, is a personal decision for the founder and the company, actually, right? Where they're moving next. So that'll be it from me.
Yeah, I'd also add that if you have a family, if you're married or if you have a partner of some kind, please include them in that decision as you're soul searching. Search your own soul and then have strong conversations with them because they are intricate pieces to the success of your organization. And there will be times you see the guys nodding their heads profusely. There will be times where they make choices, and you've actually mentioned this, where they make choices to help you continue to grow by making personal sacrifices themselves or taking second jobs themselves to make sure that you can continue to bootstrap your organization. So as you're personally soul searching, include the people that are the closest to you because they are going to be there to help you as well and are impacted by your decision.
Very well said. Thank you very much. Thank you all for joining the panel. So we'd like to leave it open for the audience. If you have any questions for the next 10 minutes, feel free to ask. Okay. I think there's a mic.
Yeah, there's mics. There's a mic in the front here.
We can hear you. We can hear you.
There's one thing if you want.
Yeah, absolutely. Yeah. So, I know this is recorded and I was light because I don't want to give advertisement, but I want to answer your question. So one example is with credit card companies these days, you earn these points, right? So if you're bootstrapping and you're paying for, if your expenses are able to be carried on credit cards that also have points, there could be large opportunities for you to turn those points into your own needs. For example, if you have a PO for $100,000 and like in our business, if someone wants to buy $100,000 worth of equipment, we purchase $100,000 worth of equipment on that card. That's translated into 100,000 points on the credit card. Well, now we can translate that into, again, at the risk of giving free advertisement, but I want to answer your question. We can turn that into Walmart gift cards, grocery store gift cards, American Express gift cards. We can turn those into gift cards that we can use as money when we're out. We joke as a family. We are okay with it, but we've put on large dinner parties with a stack of gift cards. So we paid nothing other than gift cards because of the points through the credit card. So that's an example. We've gone on vacation with points, right? We've used the points for flights. We've used the points for our stay, our lodging, and then we have our gift cards for payments that work. And so that's a creative solution. There's also, if we're not taking payroll, you'll know the term, it just left me, but it's where you don't take salary, but at the end of the year, you take oh goodness, it'll come to me. It's not counted as salary. It's a draw. Yes, it's called a draw. These guys know. So you take a draw instead of a salary, and that's taxed differently. And it's usually a lump sum versus a salary every 2 weeks. So those are just two examples of creative solutions. You guys have others?
Oh, I have a lot of really good friends that are willing to lend you money to you personally. I mean, that's, they don't have to finance the business, but basically they're saying, I trust that you're going to get me my money back. Usually it's interest free because they're friends. So that's what's worked for me. And, there's always credit cards if you can see how you're going to pay them off, because, there's nothing worse than credit card debt. But yeah, if you have to, manage it for a couple months, credit cards work, friends for longer periods of time, those are the things. I mean, you just get creative, really.
And I also want to add to that, one of the ways that we used in our business was called factoring, business factoring. I don't know if you've heard about that before. So we used the factor for a very long time, I think for nearly 3 years. And what happens is our weekly invoices goes to the factor, and they upfront us 85% of the invoice, while they're keeping 50% waiting for our clients to pay those invoices. So depending on how long, how fast our clients paid those invoices, we get the 15% back less their fees for the time that they upfronted us the money. And that's a very sure way for you to keep payroll going, because you know that they always going to fund your invoices as far as your clients are paying. But it really doesn't matter if they pay 30, 60, 90 days. It just depends that the 15% they have might not come back to you as 15%. It might be 2% at the end of the day, depending on how soon or how fast your clients pays. And also, we talked about the credit card. We are heavy on credit card. All our business expenses go through our credit card. And what that means is, going back to the points, it's a lot of trips I make myself that I don't have to pay for the hotel accommodation or even other expenses I have to pay for, because all of this is being paid for by the points on our credit card. So all expenses for us really goes through our credit card, except we think that, okay, we have to pay it a different way. So these are also very, very, very creative ways that you can use to keep your business going.
And I have two children. One is this term is used overly, but special needs, but he is challenged. He's hearing impaired, visually impaired, speech impaired. And so at one point we had to homeschool, and we paid a tutor because I can't homeschool and do everything else. So we paid a tutor to homeschool him, but she accepted cards, the gift cards, as payment so that I wasn't having to use cash to pay her. She accepted the gift cards for payment because she said she loved it. She could go to the grocery store and use those cards at anywhere she chose to use them. So having great people around you and then being creative, it does work.
Yeah, I just have to be very mindful about cash. I mean, one thing that I've implemented on top of the credit cards with points and stuff like that is I don't accept payments. So we don't accept credit card. We don't accept payments with credit cards from our customers. Basically, bank transfers, because the credit card company takes 3%. When you add it up across all the revenue, it's not an insignificant amount of money. So that 3% it's just a policy, right? But it makes such a big difference at the end of the year. So little things like that, and you just have to be really mindful where the cash goes and where every expense goes.
Very well. Thank you very much. Any other questions?
Did we answer your question? Did we answer your? Okay. Evaluation tools to assess the business. What to do with it.
I generally shy away from evaluation. The real evaluation of the business is what somebody is willing to pay to invest in it. So anybody that tries to sell you some kind of valuation, I think it's wasted money, honestly. At the end of the day, if you are to raise money, you need valuation most likely because you're raising money and you need to know what price. It's a negotiation. There is value and there is price. Somebody can tell you business is worth 10 million, and then the investor comes and says, "I invested 5 million." 5 million is really your valuation. It's not the 10 million that somebody said that you have. So you just have to be very convincing to get people to pay you more money when they invest in the business, and that's it. So I wouldn't even bother about formal valuations.
I agree. I was going to say something similar, but I was actually scared because you're not supposed to say that. You're supposed to, I have a master's in science and technology. I have an undergraduate in business school, and I find myself working outside of my business degrees most days. So I'm glad that you said it. I totally agree.
I would say you should also, we talked about this before, get a business accountant, a CPA, does your books and bookkeeping, does your books every month, gives you a financial report of your business, how your expenses went for that month, what you brought in terms of revenue, your expenses, your profit, gives you a better idea of where your expenses are at the time, right? And helps you focus on how you plan on maybe taking some extra capital for the next payroll, or if you have to go do factoring or whatever it is. But just that report that actually tells you where your business is every month is very, very important. It's a key to how you drive the growth of the business. All right. We have time for one more question. One more question.
Well, it sounds like it's happened to most of us, but the easy sign is the amount of tax you're having to pay. It's unfortunate that you don't really discover it until that time. But after the first year, if you find that you're in this triple tax scenario that I described, you immediately need to take action in finding someone who's much more knowledgeable and savvy about understanding the laws and what's available to you. That's number one. But also, there should be quarterly interactions, quarterly reports, quarterly engagements. There's quarterly reports that are due to your state and local, governments. So after the first year, you'll know for sure, but you may start to see quarterly that they aren't able to answer your questions about, okay, if this is the profit, what is that going to mean to me at the end of the year in terms of what I need to pay in taxes? And it's really not at the end of the year. There are taxes that you pay quarterly, but after the first quarter, if they can't answer your questions about taxes in particular, and then at the end of the year, if you see your tax bill, like, he mentioned his tax bill exceeded his profit. And this is not abnormal. This is common for founders who are starting businesses who aren't coming from a family line of wealth. And so, did that answer your question? I'll let Ifeanyi.
Yeah, no, very important, right? You have to train yourself to understand these things, right? Don't look at them that they're too big for you, they're too complex, I can't get it. No, because the more you train yourself, the more you're able to better ask questions that help you identify if this person is the right person for you. And for me, I had a lot of that challenges. My quarterly conversation with the CPA company at the time, I knew there was problems, but again, I was laser focused on revenue, every other thing, and not all of that. And so it took me the hard way. I learned the hard way because I had to go borrow money, try to get extra funds to pay taxes. And that was when it dawned on me, like, why am I borrowing to pay taxes? Why is my taxes more than my revenue, right? And it got to a point where I started looking into it and then ended up that there was a solution that it wasn't even supposed to be like that. So those are the things you need to be looking at. It wouldn't hurt also to just have a separate eye looking at your books. There are a lot of pro bono CPAs, right? They're everywhere. They're looking to assist business owners and founders and all of that, right? While you have one CPA here, look for another one and let them look at your books too. Evaluate what informations they're giving you to help you get to a point where you're making the best decision for you. You don't want to wait till you're hit with all these taxes before you start trying to correct it and figure it out. It's actually a long process.
Yeah, the one thing I would say is that you have to start very early with the tax filing, and you have to sit down with your tax accountant and ask them how are they going to save you taxes, because that will force them to think. They're all overloaded, especially as tax season comes, and they want to get through really quickly, and they don't have time. It's not because they probably, it's just they're not thinking about it. But if you force them, you're paying them money, right? You're their customer. Force them to sit down and think how they're going to save you money on taxes. And they'll start coming up with, oh, maybe we can use this, maybe you can use that. Now, there are some people that are truly not knowledgeable. And then luckily these days there is ChatGPT, right? Ask them, how can I save my money taxes? And go like you would go to a doctor. Here's what I found out. Can you tell me, is this right or not right? What do you think? And maybe they'll have to go do a little bit of digging into the tax code and find out changes. The tax code changes year to year, right? And so you have to understand what's happening and how money can be saved. But I think starting early and being very proactive about asking them day to day and not letting them drag it until the very last moment, the April 15th. And you need to be done with your taxes by April 1st. Well, for businesses, it's early, but whatever the date that deadline is, be done 2 weeks ahead of time.
Yeah, and also just know that a bookkeeper is different from someone who is a tax attorney. Two totally different people. Now, a tax attorney may have bookkeeping skills, but a bookkeeper may not have tax skills. And nowadays, you could literally upload your books into a generative AI tool, agentic AI tool, and have it do analysis for you and give you some thoughts to consider. You can also type a prompt in where you explain what your business is, the model, the customers, your revenue, and have it give you some considerations through generative or agentic AI. I saw you had a question. I think we have 2 minutes. Would you like a mic? You can use.
Thank you so much. Also, it is important that you check on every category of your account, because there are sometimes, and it happens to me in my nonprofit organization, that they were including the rent for my offices and printing. And this my revenue as a sales, and I'm like, no, we have different revenue sources, and that has to be categorized in a different accounts. So it really reflects the story of your business, and what it is, the decisions that you need to take on that. And that is very frustrating. So if you do that early, it will help you a lot of money and a lot of time.
That's true. So we call that having a chart of accounts for our company. So we make sure that we have a distinct account, literally an account, a bank account. So I'm going to be very simple. We have a bank account for different revenue streams and different expenses, so that we are very clear about where money is coming in and where it's going based on the accounts that we operate at the bank. And we have multiple banks too for this.
And finally, I'll just say, just to ensure that all your business finances and taxes are flowing in the right direction, and you're getting the help that you need, it will be more advisable to hire an accounting firm that does the bookkeeping, CPA, and accounting, right? So everything is done in one house. So that way, whatever questions you have, you're asking the same people at the same time, instead of having to talk to different people. All right. Well, thank you guys so much for joining us on this panel. We'll be around if you want to discuss more with the panelists. Thank you.
Thank you for your time.